Hello and welcome back to Bunnex Investment Group, and today we are going to be talking about my experience when I used one indicator in my backtesting process. I've actually come to a position whereby I saw that indicators may be lagging, but if we give them a chance, they may actually give us profitable results. So before we jump into the whole video, please make sure to check out our free signals Telegram channel. The link is right below. So the indicator that we'll be using in this strategy is the MACD or the MACD. It's actually a common indicator which is basically found under oscillators category within the MT4 or MT5 trading platforms. So the basic principles of the strategy that I was backtesting is to have 50 pips as our stop loss and 300 pips as our take profit. So this automatically falls into swing trading style. So you'll be trading all this on the H4 time frame. Why the H4 time frame? I tried to do this backtest on the M15, H1, M30, all the smaller time frames, but it actually showed that whenever the market gets into consolidation or whenever it starts ranging, the MACD becomes confusing and it will be very difficult to know where the direction is going. So the other parameter of the strategy that I backtested is whenever you get to 100 pips, you have to move your stop loss to entry. Whenever you get to 100 pips, you have to move your stop loss to entry. Then you have to enter at H4 closure. That means whenever the candlestick that you are seeing on the H4 time frame is closed. That means you are only going to check your charts 6 times a day, depending on the number of pairs you have on your portfolio. So without wasting much of your time, let's jump right over the charts. So this is GBP against USD that I've been using in my back testing, and the selling parameter is simple. It's basically a crossover line of the MACD line, which is in blue, and the signal line, which is in red, above the zero line. So in between we have a zero line in between this histogram with bars. So every crossover above that occurs above the zero line is a signal for short. Then every crossover below the zero line is also a buy. So that is basically what you'll be looking for. Your entry is going to be at closure of the H4 candlestick after you see a crossover of the signal and the MACD line. This MACD is using the default parameters of the trading view. I didn't alter anything on this indicator. So the first trade that I got was this. As you can see, we had a crossover below the zero line, which actually signified that we are going up. And after the candlestick closure, the H4 candlestick closure, we had a buy entry. After this buy entry, we actually made it to 300 pips. So the stop loss is at 50 pips. Actually, this one is at 59 pips. I made a mistake. It should be at 50 pips, the stop loss. Then on our second trade, the MACD blue line actually made a crossover with the signal line, signifying a sell trade, which we entered after a candlestick closure. Then after that, we had another 300 pips. Then after that, we had another crossover here, which actually signified a buy trade, and we made another 100 pips. Then on this trade, as you can see, we had another 4, which actually gave us another win. As you can see, our stop loss was not touched. Let me correct it to 50 so that we would see if our stop loss survived. As you can see, I've put it on 40.49.5, and our take profit at 300. It was going to be it at this point. So we were going to have our 300 pips. As you can see, we have already have 4 winning trades, which means we now have 1,200 pips. However, at this point we had another crossover below the zero line, which actually got our stop hit, and that was the first loss. Then after that we had another winning trade whereby we had 300 pips. 300 pips was actually around this point, and our stop loss, let me correct it to 50. Our stop loss was around this point, and we made our profit there. Another winning trade whereby we actually hit our profit. As you can see, we took this trade out of the crossover at this point. Then after that, at this lowest point, the MACD gave us another signal. However, this signal ended up being a loss. Then after that we had this became a scratch. Why? Because we were given a signal here, however actually a loss. So we now had 3 losses. Then this trade became a winner. We had our 300 pips. So if we check how many wins, this was a winner, 1, a loss, right? 3 trades, 2 losses, win, 4 trades, 2 losses, 5 trades, 2 losses, 6 trades, 3 losses, 7 trades, 3 losses, 8 trades, 3 losses, 9 trades, 3 losses, 10 trades, 3 losses. So it basically means that if we multiply 7 wins multiplied by, let's go to do the math. So we had 7 wins multiplied by 300 pips. It gave us 2,100 pips, and 3 losses, which gave us a negative 150. So as you can see, if we subtract this, we'll get 1,000. We'll get 1,950 profit as our profit. So trading this using a 0.1, which is a mini lot, was going to give you 1,950, and trading it with a standard lot, it was going to give you 19,500, and depending on your size of your account, it was going to give you a profit corresponding to these number of pips. So that was my finding when I tried the MACD, and on the lower time frame, I don't want to lie, it was choppy and it was very confusing. The optimum time frame that I got was the H4 time frame, and on the H4 time frame it actually performed a little bit better, and as you can see, the profit outcome that came out of the strategy is actually impressive. So we come to the end of this video. There you have it. You may try to backtest the simplest strategy, and it doesn't need any much systematic processes in order to trade it. Have a good day.